Hello traders, welcome back. In the lectures of the previous section, you have learned all about the relative strength analysis of the currencies. Now in this lecture today, I will show you which currency pairs you should choose or have in your trading terminal to get the best result from the best moving and profitable currency pairs. You will also learn how to choose a currency pair over its correlated currency pairs when you will find a trade setup. So let's get started. Okay, so here you can see the list of all the 28 majors and major cross currency pairs. Without any doubt, these are all the mostly traded and best moving currency pairs in Forex. But that does not mean you can or you should trade all of these currency pairs. There are many currency pairs which moves better, and even the charts are better readable than the other currency pair charts. In the later part of this lecture, you will get the list and idea of all the good, average and non-tradable currency pairs depending on their trader-friendly market behavior. So what should you look for to choose a best currency pair, or what are the major things you should consider when selecting a currency pair to trade? First of all, you will need to make sure that the chart of the currency pair is clear, smooth and readable. There are many currency pairs which are not very trader-friendly, since the charts of those currency pairs are very noisy and spiky all the time. You should avoid trading in a currency pair which currency pair's chart you can't understand. The second thing you look for in a currency pair is that the price of the currency pair has to be predictable. When there are many traders involved in a specific currency pair trading, the volume of that currency pair trading can be manipulated, which leads to move the price ups and down without obeying the price action patterns on the chart, and hence you cannot predict if the price is going to move in your predicted trading direction. So you have to choose a currency pair in which most of the traders making their trades, and hence the price is more predictable to make profit. The third thing you have to consider is that the currency pair must have adequate amount of price movement on average relative to the other currency pairs. There are many currency pairs which moves for 50 to 60 pips in a day, while the same kind of other currency pairs moves for 80 to 90 pips on average. To make profit, you need the market to move, since you only get profit or loss when there is price movement on that pair. And the fourth thing you should consider is the spread or commission your broker charges to let you trade the specific currency pairs. Some currency pairs like Euro USD has an average spread of 1 pips, while the GBP and ZD will cost you 6 to 7 pips on average. So you have to select the currency pair which is also cost effective to make sure that you're not losing an extra pip to the broker. So these are all the things you should consider when choosing a currency pair to trade, other than the currency pair's correlation and the relative strength analysis of the currencies. Now let's talk about these things with more details in action. Okay, so what are the clear, smooth and predictable price action charts look like? In a currency pair's price action chart, when all the candles looks almost exactly the same to each other, the candle's opening and closing prices has decent amount of distance from each of the candle and moves up or down without creating multiple candles on the same price level or forms in vertical direction, no spikes or sudden price fluctuation happens all the time, then that is the type of chart you can read to understand the trader psychology in the market and hence make profitable trading decision. Let me show you this example with a real price action chart. Okay, so here you can see a daily price action chart of GBP US dollar. Now you will notice that the chart is very much predictable because of its smooth and clear price action patterns. When a bearish candle appears after a series of bullish candles, or when a bullish candle appears at the bottom after a bunch of bearish candles, then you can predict that the market is going to reverse and change its direction. This thing happens in almost all the swing points or reversal points in a chart like this. From each of the top or bottom level, there are a certain price gap can be seen in these charts, and it can be understood when the price is going to change its direction from one market momentum to another, which you can see in a spiky and non-predictable currency pair chart. So what is a predictable currency pair chart look like? In a currency pair chart, when multiple candles tends to form on the horizontal direction or on the same price level, so that many bullish or bearish candles needs to bring the price from one swing point to another, then these currency pair charts are referred as non-predictable noisy market and hence not very ideal to trade. In these types of currency pair charts, the candles are very spiky and the price action patterns are also very noisy at the same time. Let me give you an example of this with a real price action chart. Okay, so this is the chart of Euro CHF, and by looking at this chart, You can feel that the price actions are not very readable to understand the trader psychology in this market. There are so many spiky and irregular shaped candles has been formed in this chart. Charts like this, you can set your stop loss and be relaxed. Price fluctuation is very high in these types of currency pair charts, which is why your stop loss or your trades are never safe when you trade in this market. So you should avoid to choose and trade these types of currency pair charts. You should only trade the charts of those currency pairs which you can understand and feel confident when making trade entries and exits. Now let me show you the market behavior pattern of all the 28 majors and cross currency pairs in their individual currency basket, which will let you to choose the best currency pairs more easily. Okay, so as you can see, this is the table of all the 7 USD major currency pairs where the USD has been paired up with the other 7 major currencies. You can download these and the next tables after this lecture. Now there are 6 columns in this table. The first column contains the name of the individual USD major currency pairs. The second column shows the chart readability status of that individual currency pair. The third column shows the average pip movement of the individual currency pairs. The fourth column shows the lowest pip movement, while the fifth column shows the highest pip movement of that individual currency pairs. And then the last and sixth column shows the average spreads of these individual currency pairs. These are the data which has been collected from January 2018 to September 2018, which is 9 months of trading period. By looking at this table, you can understand the overall market behavior of these individual USD currency pairs. For example, the first currency pair in this table is the Euro US dollar. And if you look at the Euro USD row, then you will see that the chart readability status for Euro USD is referred as good, which means the price predictability of Euro USD chart is very high and is dependable. Then by the second column, you can see that the average daily pips movement of Euro USD is 86 pips from January to September 2018. And in this trading period, the lowest pip movement on Euro USD was only 6 pips, while on its highest pickup time, it moved for 288 pips in one single day. And the spread of Euro USD is 1.8 pips on average. The spreads for currency pairs varies from one broker to another. I took these spread averages from a broker which charges higher spreads. Your broker must be charging less or more spread than this. Now the second currency pair in this table is the GBP US dollar. And by looking on its row, you can understand that the GBP USD chart is ideal to trade and the price movement of this pair is 106 pips in each day on average. The lowest price movement of this pair was 12 pips, while the highest was 268 pips in one single day in the last 9 months. The average spread for GBP USD is almost as same as the Euro US dollar. Now, because the Euro USD and GBP USD has the same kind of better chart readability and the spreads are also same, then to me it is better to trade the GBP USD over the Euro US dollar since the average pip movement is 20 pips higher on the GBP US dollar. Both the Euro USD and GBP USD has very strong positive correlation with each other. So personally, I prefer to trade the GBP USD if I get the same kind of trade setup in both of these pairs. This way I get more pips as profit if both the currency pairs moves on the same direction at the same time. Now what are these moderate chart readability status indicate for? These are the currency pairs which also has smooth and clear price action charts, and the price movement is also predictable but are less volatile and tradable than the currency pair like Euro USD and GBP US dollar. You can trade these currency pairs if you find profitable trade setups in these currency pair charts. For example, the last currency pair in this table is the USD CHF, which moves for 65 pips in each day on average. The average spread for this pair is 2.5 pips at the highest pickup time. You might already know that the Euro USD and USD CHF has the perfect inverse or negative correlation with each other, which is more or less minus 0.80 to minus 0.95 correlation value on average. Which means if Euro USD goes up, then the USD CHF goes down at the same time. So if you find a buy trade setup on Euro USD and a sell trade setup on USD CHF, then which currency pair you should choose to make trade entries? Well, you should choose the Euro USD over the USD CHF since the Euro USD will move up or down for 86 pips on average, while the USD CHF will move for 65 pips, which is 20 pips less than the Euro US dollar. And even the average spread is also less if you trade the Euro USD over the USD CHF. So there is no point on trading the USD CHF and make less profit by spending more spreads as broker's commission. So in this way, using the currency pair correlation and the average pips and spreads movement ratio, you can choose a best currency pair for yourself to trade for maximum profit. Now if I go to the next table, then this is the overall market behavior of all the Euro major currency pairs from January to September 2018. These are all the 7 currency pairs where Euro has been paired up with the other 7 major currencies. Now by looking at this table, you can understand that the Euro USD and Euro JPY both has better price action charts, while the Euro JPY has higher average pip movement ratio than the Euro USD, which is 20 pips more, although the spread is lower on Euro US dollar. The correlation coefficient value between these two currency pairs is 0.60 to 0.7 on average, which means they are positively correlated with each other, though the correlation is not very strong but moderate. If you open up the currency pair correlation report, then you will come to see that the Euro USD and Euro JPY has the strongest correlation with each other than any other 2 Euro currency pairs. So if you want to trade the Euro, then you should choose the Euro JPY over the Euro US dollar if the relative strength analysis also confirms that the JPY can have more impact on Euro than the US dollar. It is really a complicated game, but you have to master this to make consistent profit from this market. Now you can see that the last 3 currency pairs in this table are the Euro CAD, Euro CHF and the Euro NZD. The price action charts of these 3 pairs are not very ideal to trade, as you will see more noise on these 3 pairs than any other Euro majors. And even the spreads are very high in these pairs. So you should avoid trading these 3 currency pairs. Instead, trade the Euro USD, Euro JPY or Euro AUD if you want to trade the Euro. So if I go to the next tables, then that is the market behavior summary of all the GBP majors. Then the next table is for the JPY majors, the next table is for the Australian dollar majors, the Canadian dollar majors, the CHF or Swiss franc majors, and the table for New Zealand dollar major currency pairs. You can download all of these tables next to this lecture. So from all of the 28 major and major crosses, I personally like to trade these 11 major currency pairs along with the gold. From these 12, the 7 are the USD majors and the other 5 are the Euro JPY, GBP JPY, GBP CAD, CAD JPY and the gold. I also watch the charts of other currency pairs, but these are my all-time favorite currency pairs to trade Forex. When I find a trade setup in a currency pair, then I definitely look on the charts of its strong correlated pairs and the currency index charts to get the better idea about the whole market and specifically the currency pair I want to trade. Trading Forex is not easy. 95% of the traders referred as unsuccessful traders and they give up trading after losing a few accounts. You have to be on the top 5% to have successful trade entries and exits to make better living for yourself. There are no shortcuts to achieve that goal. You have to work hard to learn all the little things that can make you a perfect Forex trader. You have to spend a lot of time practicing the charts and the currency pairs price movement. So never stop learning the market. Sooner or later, you will get the benefit of your hard work and dedication. I wish you all the best for your trading career. With that saying, I am signing off for now. We'll see you in the next lecture. Till then, have a nice day and goodbye.